Hey, everybody, welcome back. It's Tuesday, so you know what that means. We're here with another Money Moves, and we got some great stuff to talk to you about. And Wendy Lee is with me today. As always, she's super awesome. That's why she's here. A lot of good stuff. And I love the new background you got going on. I don't know if I noticed that
and
last
it's
time.
real. Like you can touch
Yeah, that's like crazy. I've got like, so I see what we're doing here. So now I'm going to have to step up my game. So, I got you. I see you. So we're going to make it happen. But we're not here to talk about that today. What we're here to talk about today, folks, is your credit. You hear some of the gurus out there. I'm not going to name names, but you know who they are. Oh, pay cash. You don't need it. That is total BS. We live in a credit society, and it's so important that you have good credit. But the question is, what do I do? How do I do it? Do I have to pay somebody? What's going on? So today we're actually going to talk about the 4 things that you can do beyond the obvious, and we're going to talk about a little of the obvious too, but beyond the obvious that you can do now to talk about or to improve your credit score, because it's important, and we're going to talk about why as well. So strap your seatbelt on, turn up your volume on your Spotify or your favorite podcast platform, and let's get this party started in just a few seconds. So credit. Do I need credit? I can just pay cash on everything, right? Have you heard that before, Wendy?
Oh, yeah. Well, grew up in Ramsey country. Yes.
Yeah. Okay. Well, I wasn't going to name names, but whatever. And don't get me wrong. I like Dave's stuff, about 60, 70% of it. But a lot of it's old, outdated. And let's be honest, folks. I mean, you can't really get away with paying cash that well. Some places don't even accept cash, which that's a whole other conversation. That's not really technically legal. But we're cashless. You can't do that and have a business legally. But it's still, that's the norm now. What's going on? So it's so critical that you have good credit. And there's a lot of companies out there. Some of them are good. A lot of them are scams about, we'll fix your credit or credit repair, or we'll lower your debt and things like that, but it has a negative impact to your credit because they don't tell you the whole story until you're already in it. So there's a lot that you can do on your own, but why is a good credit score so important? What do you think, Wendy?
Yeah. Well, I mean, one, it allows you to leverage. So there's so much when we're talking wealth building long term, right? There's a lot of people that use credit to help build their asset portfolio. Real estate, for example. And if you don't have good credit, you can't do that. You can't use it as leverage to increase your wealth.
No, and that's the thing. And that's going back to the gurus out there that say, all credit is bad credit. That is wrong. That is wrong. Credit is a tool. You've got to have the discipline to use that tool, and you got to know when to use that tool and when not to use that tool, right? Credit for perks and living expenses and, stuff like that. That is not a good use of credit. Now, if you're the people out there that are using it for points, like your airline card or whatever, your travel card or whatever, and then you turn around and pay it off every month, I'm not talking to you, so don't blow up the commentary. What I'm talking about is people that are robbing Peter to pay Paul. They're living on their credit cards, and a lot of people are doing that now. We're almost creeping up on $2 trillion in debt right now, in consumer debt, and that's scary. That's a scary place to be. It's higher than it was in 2007, right before the last bubble, and we got some wobbly wheels going on. But it's so important for the simple fact that if I have an 800 credit score, right, and you, Wendy, have a 550 credit score, you're going to pay a lot more for the same items, and you may have to buy them at different places, like rent to own places or things like this, because you don't have credit. And if you don't have credit at all, even if you pay cash for everything and you're a good guy or a good gal, right? We don't live in Walnut Grove anymore. We don't know, the banker or the store owner down the street doesn't know you and your family for the last 20 years. What do? They look at your credit score. That's how banks and lenders and companies know you now, is that credit score. That's why it's so critical, right?
And even renting.
Yeah. I didn't even think about that.
Looking to rent. That was one thing that I had to be aware of, is my credit score, because even family members of mine have rental properties, and even though it's individuals, they run that credit report and are very hesitant to rent to anyone with a low score. So that's important too.
Yeah. Well, because a low credit score is an indicator of a lot of other things, and I'm not going to get into that. But I've posted a few things out on social media that talk about lower credit score areas. You look at what's going on in certain aspects, certain neighborhoods, and things like that. And there's typically credit score ties into that. Which I'm not going to get into that political conversation because it's not political; it's factual. But it's one of those things that you've got to be very aware of it, and it's another aspect of your financial world, your financial house, that you really need to be aware of and take control of. Don't just sit back and let it happen, right? Oh, well, my credit score is low. I don't know what to do about it. It's not very difficult to get your score back up if you're disciplined and taking consistent action on it. So, the number one, obviously, and this isn't my technical number one, but pay yourself on time, right? Even if it's the minimum payment, pay it on time. Okay. And what I mean on time is like 2 or 3 days before the due date, not the due date. You pay it after the due date. The cool thing is, if you're late like a few days, not 30, but if you're late a few days, that's not really going to impact your credit score. You are going to get hit with a penalty, and they're usually pretty stiff, right?
Yep.
That's why I've got all my stuff set up on auto pay minimum payments. So that way I know definitely my minimum payment's going to be paid. Now I go in on the 1st and the 15th and look, and I pay the extra or pay it off or whatever the case may be, depending on what strategy I'm trying to do. And if you've got a lot of credit card debt, I'm going to say one word: debt snowball. No, Dave didn't invent it. It's been around. A lot of other places have used it. Dave leveraged it and has built a business on it, but that works. So that's one way. But again, paying your bills on time.
Yeah.
And obviously limiting the number of inquiries. Those are the two Johnny Obvious, Captain Obvious up in Indianapolis. But you look at why the credit inquiries, and I see people, I'm sure you have gone through stores and have seen, sign up for this credit card and get a free whatever.
Yeah. 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 I hate, honestly, shopping at Kohl's. It was Kohl's and not Ross, but one of TJ Maxx. Every time you go in, it's like the cashiers must be trained that you have to ask if you want to open a credit card. And it drives me crazy. And then especially Kohl's, they're like, but you get this, but you get that. And it's like, so I would get to the point at Kohl's, I go to the checkout, I say, hi, here's my card. No, I don't want a credit card. And no matter what you say, I'm not going to get a credit card. So please just run my card, my debit card, please.
Funny.
Thank you.
No, that is funny. I remember the very first experience I had with that. I was in college, and college students, if you're listening, they will come after you because they know you're going to college, probably going to get a degree and get a job, and you're going to make some money. So they try to get you early. And there was a card out there, and they're still around today. It's one of the big four, right? It's not a Visa, it's not a MasterCard, it's not American Express. So you figure it out. But they had other students there at the student bookstore, right, at the beginning of school. Hey, get a credit card, you get a free T-shirt. I'm 18. I just turned 18, right. And I'm like, well, I can get credit, and they're like, yeah, you're pretty much, you can get $1,000. Da 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 da. And if you get $1,000, it's like $15 a month. I'm like, I can afford $15 a month. I got a free T-shirt. I signed up for it, and I had that card for a while. I don't have it anymore. Once I started waking up and realized what was going on, but they get you, and I've seen 2 free liter of soda. It's like, and people are signing up for it because they want that free stuff. But those credit inquiries really impact your score negatively, right? So, number one, pay your bills on time, limit the number of credit scores. So here are the 4 that we're talking about that you may not be aware of. Okay. Number one, your total balance is too high. Okay. And what I'm talking about there is, credit usage. Okay. So, and that's specifically the number we're looking at, right? Not, how much you owe, but the percentage of your credit usage. Okay. So if you've got a $10,000 credit card and you're at $8,000 balance on that, that's a negative impact. Okay. And then you look at, all your combined, it's not just one card. If you've got the one card, that's obviously it, but take a look at all the credit cards you have and add up what your limits are. Okay. So if your total credit card limits are 22,000, those are all the limits with Lowe's and your Home Depot card, your Kohl's card, or whatever the case may be. Or Lazarus. I don't think Lazarus is still around anymore. But it's one of those, those different store cards, the Shell card. Take a look at all your limits and then add up all your balances. Okay. The total balance versus the total limit, if you're 30% or higher, that's a big negative.
Mhm.
You ideally want to be using less than 30% of your available credit.
Yeah.
Okay. So
And also
spread the love around, right?
that's a
And,
quick
and
way
that's the
to
thing. Go ahead.
sorry, I think there's a delay. That's a quick way to improve your score too. I know when my score was kind of low and I wound up paying off all my credit cards and, I still use them, but then pay them off each month. My credit score went up probably 60 points from doing that.
Yeah. Yeah. Well, and the next one, and it kind of sounds similar, right? But it's not your total credit usage. What this one is the balance on each card is too high. So not only do you have to worry about your total amount, right? But if you've got one or two cards that, okay, well, I like this card, my favorite card, and I'm just going to give them a plug because I love the airline, is Southwest, right? I love the points. Give me the points, right? Give me the free flights. So it's one of those things that, you do that and it's like, okay, so I use that card. I don't really use the other ones. And, I typically pay it off every month like that. But on those months where, okay, hey, I made a big purchase or whatever for the company or something like that, I may carry that balance for a couple of months. That's a big hit because all of a sudden on that one card, I'm like, way up on my percentage. Now my total usage may still be low,
Right.
but again, that individual card is too high. And so that's one of the things that are really a big challenge, right? So, that's something that can negatively impact your card or your credit score as well. Okay. Now, the third one, again, it sounds a little bit like that, the same thing, that combined balances are too high. And I'm not talking a percentage, but just based on your profile, your age, your income level. And you've seen it, when you log into your certain accounts, usually every year or every other year, they say, hey, we just need to confirm your income or whatever.
Yeah.
Well, what they're trying to do is determine whether they need to increase your credit limit or it gives them the opportunity to get you further in debt safely for them,
Right.
right? Or, ooh, John's kind of, he had a pay cut or something. I don't know what's going on, right? So we need to lower his limit to his balance. They won't lower your limit to below what you already owe them, unless there's something where you're not paying them or whatever, and then they just cancel the card on you. But what it is looking at, okay, hey, he's kind of getting risky, and they constantly look at this stuff. And they'll pull what's called soft credit, meaning it's not a hard credit pull, so it doesn't impact your score, but they're looking at your credit constantly.
Yeah.
Okay, so it's one of those where they don't pull your card or whatever, but that card where the combined balances may be too high for your profile. Like, ooh, you're a credit user. That's not a good thing in their eyes. It is because they're making money on it, but the risk is getting higher for them. So I don't know if you want to add anything to that one. That's kind of a weird one.
Yeah. No, you covered it.
All right. So that, and then the other one, and this is something that younger people struggle with, is the oldest card on your file isn't old enough. Right. And so if you're 25, 26, and you're like, why can't I get my credit score over 800? Right.
Yep.
That's probably one of the factors they're looking at, is the fact that you're still a new credit user. They don't know if they can trust you or not. It's one of those things. They'll give you the credit, but we're not gonna give you a super high score. So it limits on what access you have and things like that.
Yeah.
And that's something that you recently graduate high school, you're trying to get established, or you're recently trying to get graduate college, you're trying to get established. That's one of the factors that they're going to look at.
Yeah.
Not a lot you can do about that, except I've seen this happen. They'll listen to one of the gurus, so they go out and they cancel all their cards, or they pay a card off and then they cancel it. And that can devastate your credit. Number one, especially if it's one of the oldest ones, you just lost that date. Number two, yeah, you paid that balance off, but then you also canceled that credit limit because you canceled the card. So it lowers your score overall. Well, wait a minute, I paid it off and canceled that. That should be rewarded. Well, you may get a ooh-ah on the radio, but in the real world, it's going to negatively impact your credit.
Yep. Yeah. And, one thing I've heard people talk about is for their kids, to help their kids if they know, like I have one son that's very entrepreneurial. And so one thing I can do to help him to have good credit out of the gate is actually open up a card and him as a user. And so a credit card with him as a user will actually help him establish credit even before he's able to do it himself. So that's something I've heard recently. I don't know. I haven't done it yet. I don't have any experience with it, but I was reading about that a couple of weeks ago. So something to
Yeah,
track.
that's one of the things that is available. I'm not personally me, and I'm not saying it's right or wrong. It's just a personal belief I have about co-signing, and
Mhm.
that's really what that is you're co-signing for that person. Another strategy, and this is one that I used with my kids, is as they were trying to establish credit. I helped them look at, okay, these are the different credit cards out there because they get offers in the mail, right? They're all in college now. Or I've got one who's actually graduated, so but while they were in college, just like, they came at me, they're coming at them with all these offers and blah, blah, blah. So I'm taking the time to go through, okay, let's open these and let's decide which one's the best.
Yeah.
Well, it's the one I get the free shirt or whatever, right? No, 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 no. Let's flip it over, turn it over, and let's look at the terms and the
Yeah.
APR and stuff like that. Let's look at the terms and then apply, because there are cards that are designed for students, right? So they look at the credit score and stuff a little differently than a 30-year-old, right? It's just they look at it differently and it's designed differently, so it's made for those people. So they're a little more receptive to lower scores, lower age, and things like that. But you can do what's called a secured credit card.
Mhm.
Okay, and there are cards out there where they start maybe the first year, 18 months, maybe even 2 years, where you get a credit card with a $500 limit, but you've got to deposit $500 in the bank, their bank, and they use that as collateral for that credit card. That way, if you don't pay it, the bank's assured that they're still going to get their money. But it's a regular credit card. They report it and stuff like that. And that's one of the things that you really want to do that. Going back to your comment about renting, most larger firms are doing this now where they actually report your rent and things like that on your credit report, which helps
Mhm.
as long as you're paying your rent. So that's a way to establish credit and things like that. But, so those are kind of the four things. One, your total balance is over 30%, right? The balance on each individual card may be too high. You may be under that 30%, but you got one or two that are really racked up, right? The combined balances are too high, and that's just the total dollar amount based on your profile. And then lastly, that oldest card, and again, you can't really do anything about that one until you get, and it's like excellent is 25 years. So it's going to take you a hot minute. I think I just crossed over to excellent credit now. I'm like, yes. Wait a minute, that just means they got older. That sucks. So anyway, but that's one of the things. But the question is, okay, how do I manage it? How do I fix it? Right. And I know you were just talking about one of our partners, right? You want to share a little bit about that, what they do?
Yeah, we have a partner that helps with a couple other things that we do through our financial business. But when you're a member with them of their identity theft protection, part of their service in that is to help with credit repair and credit counseling. So not like, hey, it's not your typical credit repair that you might find online or get ads about, but true credit counseling to say they do a thorough look at your credit report and say, here's what we have, here's the things we can have removed. And they will guide you through how to really quickly increase that credit score. So if that's something,
Yeah, and
I
I would.
actually had somebody reach out the other day that they just had, a couple rough years and some things pop up on their credit. Some of them weren't even legit that was affecting their score. And I directed them to our partners to help get that improved. So
Yeah, and I would almost call that credit coaching, right? When I think of
yeah,
credit counselors, I think of the shady guy. Oh yeah, we'll give you credit counseling. We'll consolidate your payments into one lower payment. You pay us directly, and then
right.
we'll pay.
Yeah.
What they're doing is negotiating your balances down, and your credit's going to suffer because of that. And they don't tell you that. Well, some do. A lot of them don't, and you end up getting your credit score screwed after you're already in, and then by then it's too late, right? So I would call this credit coaching. They're not
Yep.
negotiating your balances down or anything like that. They're actually coaching you on what steps you could do in order to make your credit better. Now, that's kind of if you need that added help and things like that. It's a great program. Highly, highly recommended. It's just like working out or whatever. You have a coach there with you, you're going to do a lot better. Now, some of you are like, well, I got this DIY, right? Do it yourself. And I'm okay with do it yourself on like landscaping or maybe some work around the house. But when it comes to financial stuff, I'm all about getting a coach. But if you are a DIYer, you're in a situation where, hey, I'm like way in the hole. I can't afford to do anything, right? And it's a low membership. So, talk to us if you're interested about that. We can make the connection. But the second thing is, looking at like Credit Karma, or the one that I use is Credit Wise, and that's Capital One. It's a fantastic app. I can't speak to Credit Karma, so I'm not knocking it. I don't know it. But speaking of Credit Wise, I mean, it's a free app that you can download in your app store. But it'll go through it. Actually do soft pulls every couple of weeks, so you know kind of what your score is. And it's going to give you a good ballpark range. I've always found that what I see on credit wise is actually a few points lower than what I actually see in the bureaus, which is good. But it'll tell you and give you the opportunity of suggestions on what you could do to improve your score. Not only that, it gives you scenarios on, okay, what if I paid this $1,000 balance off? What would it do? And it'll tell you what it's going to, the algorithms will tell you what it'll impact your score positively. Hey, I want to buy a new car and finance it. What would that do? Ooh, it's going to lower your score a little bit. And so that's something to kind of keep in mind too, to be able to use those tools out there. There's a lot of them available, but do not just sit back and like, oh, my credit scores, screw them. No, that's your profile. Again, we're not living in Walnut Grove, and I've got a lot of, millennials and Gen Z's going, where the hell's this Walnut Grove at? You Gen Xers get me, and the boomers do too, but it's one of those that they don't know you anymore. And the only way they're going to know you and decide whether or not to lend you money at a great rate to keep your costs down so you put more money towards wealth is that credit score. So again, went a little long today, guys, but it's so important in your financial house to make credit score a part of the conversation. Okay. And if you need help on that, Wendy and I are here for you. Just reach out to us, through DM or whatever the case may be. Do us a favor though, because we're trying to grow the channel. We've obviously got the podcast out there as well. Give us some feedback, give us some love, share this, if you will. If you're getting good information for it and this is helping, we would greatly appreciate it. And it helps us reach more people out there. And guys, we're in a fight here, financial revolution for middle class. And, we're trying to help people and teach you how to get control of your money. The economy is getting tighter and tighter. And, there's some announcements that just came out last week. It's going to get tighter and tighter over the next few months. And all we're trying to do is help educate you to be able to make some great money moves for you and your family. So we'll see you next week, next Tuesday. Leave us your comments. Give us that thumbs up below and have a great week. And we'll see you next Tuesday for another Money Moves.